Jai Jinendra, good morning and namaste. Welcome to Jito UK's alternative investment series. And today we bring to you two investment opportunities. In current climate of low returns, where it seems to be a norm for traditional financial investments, today we are proud to present two investment opportunities that offer significantly higher returns. Our presenters today are seeking additional funding to expand already proven concepts and products. These two companies have credible investor backing and experienced management teams. These investments are in India and in Indian rupees. They are only suitable for investors who understand the risks associated with such investments. It is highly recommended and advised that you take professional advice as and when needed. Before we start, a quick disclaimer about the recording. We are live on YouTube and it is being recorded so that our participants who have not been able to attend can watch it later on. To start, as is customary, I invite Shrimati Sonali Mehta to recite Navaka Mantra, followed by an update on Jito activities by our chairperson, Shri Nimesh H. Mehta. Over to Nimesh Bhai. Nimesh Bhai, your camera has gone off. I think he has lost a connection, so it falls down to me to do the Navaka mantra, and I will pass it on to him when he gets back his connection. Excuse my voice. Om Namo Arihantadam. Om Namo Siddhadam. Om Namo Ayariyadam. Om Namo Vajhayadam. Om Namo Lohe Savya Sahudam. Aiso Panch Namo Karo. Sappavas Pranav Karo. Manglaranche Savvai Singh. Parvam Vahi Mangalam. Is Nimesh Bhai back?
No, thanks for that.
He is back.
Okay, we've just done that, Nimesh Bhai. We can proceed.
And Nimesh Bhai, over to you for welcome update. I have done the Navaka mantra, sorry. You are muted, Nimesh Bhai.
I'm back now.
Please unmute yourself, Nimesh Bhai.
One second. Okay, can you hear me now? Hi, can you hear me?
Yeah, we can hear you fine.
Okay, I apologize for that little hiccup after the team had set up so well. My laptop died at the last minute. So, welcome everybody. My name is Nemish Mehta. I'm chair of Jito UK. And I would like to welcome you all back to our Jito event after some time. Jito, just to remind everybody, is about three main things. Jito stands for Jain International Trade Organization. And we have three pillars. One is Seva, so service to others, Siksha, education and learning, and the third one in English is economic empowerment. And in the UK, we have focused mainly on economic empowerment, which is to help Jains network, improve their professional skill levels, professional careers, but most particularly to increase business. To help each other develop their businesses, to help entrepreneurship, and of course to help with financial improvement. Now, very interestingly, just before this event, Jito had hosted a global summit. The summit was held in Dubai by the Dubai chapter. 11 countries were represented. There were 350 delegates turned up. And it was really a wonderful event to actually meet other delegates, to meet other Jain people in different countries. It was an outstanding success. I cannot emphasize how wonderfully the Dubai chapter hosted us all, how they organized it, and also the outcomes. And the most amazing thing was the networking sessions and the companies which were presenting, looking for suppliers. You could see in front of your eyes people developing relationships, people developing common collaborations, and I believe the biggest deal was an Australian property developer, a Jain person who is developing a 16-story building, actually found somebody from the summit to change the way the building would be developed into a wellness, a holistically wellness living building. And so, from a scale of two people working together to deliver a service issue to two very large companies actually finding somebody. And the interesting thing was that you could trust the person at the summit. You were all there because you were Jain. You were all there because you had an interest in developing your business and meeting other people. And so there was a very strong trust factor, apparent. And so this is the basis of Jito, that if you have like-minded people who have the same ethical sense, the same moral framework, it makes it so much easier to do business and to develop those relationships. And so I would really encourage people to join Jito. It's now represented quite well in 12 different countries, India being the biggest. US has a population of 150,000 Jains. So, that's a market worth developing. UK has about 60,000 Jains. UAE has 5,000 Jains. Kenya and East Africa, Uganda, Tanzania, almost another 120,000 Jains at least. So we are well represented as business communities in many countries, and by being a member of Jito, we can much more easily reach into these countries and find somebody who's willing to help. Jito is the largest global Jain organization, and it continues to grow. And so please, if I can encourage all our listeners, try and join, see what you can give back to the other Jains in the UK, and also see what you can gain from other Jains around the world. We will be developing our international links much more strongly than we have in the past. And so I think you will find that very beneficial. So now today we have a first kind of event for Jito where we're directly pitching some investment opportunities. They've been well researched, and the presenters, the chair, and the conveners will go into all of that in a little while. What I would like to do is to just highlight quickly that in March, the UK chapter is planning a physical conference day, and that will promises to be full of really good events, good topics, great speakers, and of course the chance to network and have lunch and dinner together. And further news will follow on that. I would like to thank our sponsors, Comline Auto Parts, for looking and supporting Jito and believing in the mission that Jito has. And we, of course, are open to new sponsors and to new people who want to get involved to further the ideas that we have. So, Jai Jinendra, everybody, and let's roll on.
Thank you, Nimish Bhai. Now, before we continue, a very important disclaimer. This webinar is intended solely to provide information to the public, not intended as specific financial advice. Please do not invest just based on this webinar. Have a proper professional advice, and that is the highest recommendation from Jito I can give you. The first company today which is going to be presenting is Landbox. We are fortunate enough to have Manik joining us from Landbox. Landbox is India's leading P2P NBFC marketplace. P2P investments is a regulated business in India, where RBI has issued the license to roughly 20 entities. Landbox is one of the oldest players, having managed about rupees 500 crores worth of cumulative investments till date for retail and high net worth individuals. Manik, speaking on behalf of Landbox, will be presenting to us their new product, Per Annum. It caters for premium category of borrowers and aims to generate returns of 9 to 10% for the Flexi product and 11 to 12% for the locked-in investment for a year. Before I invite Manik, quickly, if you have got any questions, and I'm sure all of you will have some questions, please put them in the chat and we will address them in Q&A section. Now, without further ado, Manik Khosla.
Thank you, Anurag, for the generous introduction. I'll share my screen so that the deck is visible. Yeah, can you confirm if my screen is visible?
Yes, Manik. You're good.
Wonderful. Hi everyone. Hope all of you are doing good. Thanks for sitting down and listening to me on a Saturday afternoon. Thank you, Jito, Anurag, Abhilasha, for organizing this and giving Landbox an opportunity to talk to an audience sitting outside the country. I'll quickly introduce myself before we get started talking about Landbox and Per Annum by Landbox, which is the topic of discussion today. I've been with Landbox for about 4.5 years now. I look after new business initiatives at Landbox, which includes curating new digital investment products like the one we're talking about today. I joined the company back in 2017 when it was a small company, about 7 to 8 people. Today, we've grown to 60 people doing 30 crores worth of fresh investments every month and managing about 500 crore worth of assets. We're aiming to reach 100 crore worth of fresh investments every month very soon as the end of this financial year. And Per Annum is a step in that direction. Now, Landbox is a peer-to-peer NBFC. We're calling it an NBFC because the peer-to-peer lending and investment business is a regulated business in India now, which means that the Reserve Bank of India, the regulator, issues guidelines, and anyone who meets that guidelines and gets a license is allowed to run the business. To give you some background, the regulator was very cautious initially regarding the industry. And one such cautious measure was limiting the exposure of any individual investor to about 10 lakh rupees, 1 million INR, just when they started exploring, which was honestly too small a ticket size for us to be able to talk to HNI investors. But gradually, as and when the industry progressed, for a couple of years, the RBI observed how we did, how the industry did, and now the limit was increased to 50 lakh rupees, 5 million, in December 2019. And a 50 lakh ticket is sufficient enough for us to go out and talk to HNIs and UHNIs, because that is still an amount that they would want to consider investing. Otherwise, the 10 lakh ticket initially was too small for us to be able to consider an audience of the kind we are meeting today. This is some background. We can now start talking about the product in particular. So today we're talking about Per Annum. It has become a flagship product for Lendbox in a very short period of time. Most new investors are asking us about it, want to invest in Per Annum. This is a product where we lend to people who do not really need a loan. These are people who use debt more as a medium of convenience rather than a need. When you lend in Per Annum, you're giving out your money, essentially going out to the best of professionals with the best of credit scores and incomes, and it is truly people who are using this money as a convenience rather than taking on debt. So I'll quickly give an introduction about peer-to-peer lending and investing, what essentially it is. Now, peer-to-peer investing is essentially as old as money is. People have been lending to each other and charging interest on it ever since time immemorial. What Lendbox and platforms like us have done is to formalize and digitize this journey and experience, both for borrower and the lender. People used to lend between trust-based communities. This is one such community we're sitting in the middle of. We've just brought that experience online and enabled you to lend much beyond your close-knit circle. Obviously, Lendbox performs the role of a marketplace, which means verifying and vetting anyone you're lending to, and doing all such functions which are required. Now, one thing which is very interesting here is that lending is the cash cow for all banks and financial institutions, and a product like lending was not available in the formal economy to retail and HNI investors. So essentially, this is something which was the bank's cash cow, and they would want to keep it to themselves. Hence, one particular goal of Lendbox and Per Annum is to enable retail investors like you and me to be able to make money out of what is essentially the bank's cash cow. This is what Per Annum aims to do. This is what Lendbox aims to do. One thing which we're very, very particular about also was to solve problems associated with traditional debt investments, which was low returns, lack of liquidity, high lock-in tenure. So this problem we handle very well in Per Annum. And when I tell you how we invest in Per Annum, I'll give you more details about that. Quickly about Lendbox, we were found in 2015. We got the RBI license in 2018. 500 crores worth of investments managed till date. An average investor makes about 14% on an annual basis on our platform. There are about 50,000 investors, and we managed about 400,000 P2P investment transactions till date. We've generated wealth in excess of $5 million. Most investors prefer the proprietary algorithm, which means they allow the system to invest their funds rather than choosing each loan or investment themselves. And about 70% of the investments are managed by the system itself. So what you can see on my screen right now essentially tells you what Per Annum is about. We have, under Per Annum, we have, instead of directly going out and sourcing borrowers, which means finding people who need a loan, we've rather gone the B2B2C model, which means essentially a partner company in between who is sourcing these borrowers, who is finding people who need a loan in partnership with who we underwrite. the borrower, and we issue loans, or essentially we issue lines of credit to these people. Now, the goal behind having an additional partner organization or someone else who's sourcing these borrowers is the fact that we essentially lock in the use case of money, which means that we're not lending just for any purpose. If we're lending with a partner with a locked in use case of money, which might be we load money in a card, or we might be giving out loans, say for an educational course or for medical treatment, we're kind of we're kind of locking in the use of the money, which also essentially reduces the risk to a large extent. We follow best-in-class underwriting practices. There is enough due diligence done both on the borrower and the partner, which means any partner company that we tie up with has to go through several levels of due diligence. There are strong legal agreements in place. There are processes which help us decide which company we want to partner with and which company we do not want to partner with. Under Per Annum especially, we want to be very, very sure of who we are working with, because we want to keep it as a product which is very, very niche, and only the best of the best are allowed to be able to take a loan via Per Annum. We are very strict about founder profiles, about company background. Entire flow of information between us, partner companies, and the investor is digital, API based. Even when you invest as an investor, we're very particular that all processing, all information is available online. We do not do anything offline, and I think being digital is one of the goals of the product and Lendbox also, that we want to take the inconvenience of doing things offline away when you're investing via Per Annum. So one particular issue with P2P investments was that what if I lend money to someone and the person goes away late? How do you diversify my investment in that sense? Now, this is essentially what this slide tells you, that when you put in money as an investor, your money would go out to hundreds and thousands of different people as a borrower, which means if you're putting in 100,000 rupees, my system is dividing that money into 10, 20, as many people as possible. We have the ability to invest a ticket as low as rupees 100, which means that my system can diversify our investment over several borrowers. What's also important to understand here is that all of our transactions are regulated via a bank managed trustee, which means every time money comes in and goes out of the account, there is a bank managed trustee who's approving these transactions. We are able to provide same day deployment of funds, which means if you're investing money today, you can start earning interest right from the next day. These are two very, very important problems I think we're solving, and issues which are associated with new age investment products. By a trustee brings in much more level of trust for the investor, and the fact that there is no delay in terms of when you start earning income on your capital. That problem is also which we're solving with Lendbox and Per Annum. So there are two different ways you can invest in the Per Annum product, and honestly, this is something. The first way is called flexi investment, and this is honestly revolutionary in the sense that we're the first player to be able to offer a liquid investment in a peer-to-peer investment setting. What that means is that we allow you to add money and withdraw it any time that you need that money. So essentially, there is no lock-in to your investment. You can add money today, you start earning interest from the next day. 5 days later, you say that I need that money. You can come to my platform, click on withdraw, and you should have your money by the end of the day. Now, no other platform I feel right now offers this service, essentially because we managed to build a very strong secondary marketplace also, which means there's always a queue of new investors who's willing to park money in the product, and we are able to liquidate your investment as soon as you request it and send it to your bank account the same day or the very next day at best. We're offering returns of 9.5% per annualized returns of 9.5% in this product. The minimum investment amount is 50,000. There's no maximum limit. You can invest as much as you'd like, withdraw anytime. As an introductory offer right now, we're not charging any investment fees on the product. and there's no TDS deduction on the income you're generating on this product. Essentially, whatever interest you're earning, you're able to withdraw all of it to your bank account. The second way, the more traditional way, is when you lock in your money for a fixed tenure. Right now, we're offering a tenure of 12 months, where we're incentivizing you by offering a slightly higher rate of interest of 11%. You can invest a minimum of 1 lakh. Obviously, there's a maximum cap of 50 lakhs, which has been put in place by the regulator. Again, no investment fees, no TDS. The benefit of the fixed term plan over the liquid plan is that this allows us to compound your returns, which means that any interest you are earning every day is compounded and reinvested in the new loan, so that there's a compounding effect and you end up earning more at the end of the tenure. Something I missed to add in the flexi investment is that your interest is credited to your account every day, which means at the end of every evening, whatever interest was due on your capital for the day is credited to your wallet. And if you want, you can withdraw it to your account. So this is also something very unique, that we're crediting your income back to your wallet every day. Yeah. So quick background about who are the people who are getting money via per annum. If you can see, essentially almost 75% of the people have a very, very high CIBIL score. We're talking in excess of 775, which is a very, very premium set of borrowers. These are people who would essentially get loans from your Citibanks and your HDFCs, and these are people who have clean track records, who probably never defaulted, who are running a good credit card and housing loan, and they're people who are very premium. And this is how we ensure that, like I said in the beginning, that via per annum, we only want to give out money to people who fall in the highest of the high category. Like we said, 2% of India's most credit-worthy population. Some more information on where we lend. So up until now, we're talking just metro cities and tier 1 and tier 2. This will give you that background. One very important fact is that under this product, we're only lending in cities where we have a physical collection presence to meet any eventuality, which means that any city in which I'm giving out a loan, I have a team present physically to be able to collect the debt in case it goes bad. This is something that not a lot of digital platforms like us offer, but since we wanted to be very, very sure of what we are doing, I think this is something that we insisted on right from day one. What do you need to start investing in per annum? We do all KYC as per RBI guidelines. So essentially, you need a PAN card and a proof of address. You need a bank account, which can be a savings or current account, or an NRO account with any scheduled Indian bank. So we only take INR, so that's essentially the reason behind an NRO account. The income is taxable under your normal tax slab rate. The head to be used is called income from other sources. A minor can invest. You can invest via your LLPs, your HUFs, and your private limited corporations. Essentially, anyone with a PAN card can invest. Can I invest more than 50 lakhs? Yes, that's a question that a lot of our HNI investors place. The way to do that is that you have to create multiple different investment accounts, each with a cap of 50 lakh rupees. I think this is it. You can see the URL here. This should be up. When you visit this, you'll be able to sign in, register, add money. I've given my email and the team's email right here. You can reach out in case you have any questions. Obviously, I'm going to answer your questions after this, but any further doubts, we'll be more than happy to answer. We allot each individual investor, we allot a relationship manager or wealth manager essentially, which means any more pressing questions or issues you have, they'll be more than happy to answer. Thank you. Thank you, Anurag.
Thank you, Manik. Give me just 1 second. Thank you, Manik. And I see quite a few questions have come up in the chat box. Thank you. Please keep asking those questions and we will address them in the Q&A section, because I have a feeling some of the questions might be related to both companies. So let's do it at the end. Our second presenting company is Bike Mania. Sorry, 1 second. I forgot to change the slide. Bike Mania is one of the India's leading two-wheeler mobility tech startup. They are based in Bangalore. Their core focus is EV as a service ecosystem. Having partnered with Hero Electric to source discounted motorbikes and also with full proof warranty, they are offering an attractive rental income share through their product Volaris. Investors across 3 continents, which have helped the startup grow sustainably with no debt on the accounts. They have some marquee e-commerce companies as direct customers and a very strong brand presence in retail segment. They have managed to build a strong track record on their Volaris portfolio. So without further ado, I'll invite Rudra to come and present their proposition.
Thank you, Anurag. I'll put my screen.
Rudra, I can't see you. Have you disabled your camera?
Can you see me now?
Hold on. Yeah, now I can see you. Yeah, we can see your screen as well. Over to you, Rudra.
Thank you so much. So thank you, Anurag. Thank you, Bilasha and the entire team at Jito for giving us an opportunity to engage with this community of investors. I'll quickly give a background of our company and then move to the product, which is what we call Volaris, which is vehicle on lease at rental income share. So we started Bike Mania 5 years ago, and that time the concept was very, very novel, that why don't we create an ecosystem where anyone can rent a two-wheeler for any duration they want, and really tap into the technology and therefore benefit from the entire sharing economy. We had fantastic examples at that point in time, companies like Zoomcar, even Uber and Ola were doing very well in the country. So, but all these companies were very much focused on four-wheelers, but India is primarily a two-wheeler market. And we sensed an opportunity where customers who, for whatever reason, whether they are in a city for limited days or whether they have difficulty in purchasing a two-wheeler asset, or whether they don't want to buy any asset because they have a different taste, they want to try different vehicles and they want to keep that flexibility. So to cater to that segment, we started 5 years ago. And eventually what we realized is that there's a big market in the e-commerce industry. So there are so many riders out there who want to, who have got job opportunities. So companies, e-commerce companies are willing to give them a delivery business opportunity. But primarily you need two things to enter the ecosystem. You need a two-wheeler and you need a smartphone. And of course, you need the basic skills around that. Now, smartphone is something which is already democratized. And therefore, we are playing a role of democratizing access to two-wheeler for the people who wish to have it on a flexible ownership and not really committing their own investment for any reason. And this segment, which is basically the e-commerce delivery ecosystem, happens to be one of our core channels to drive the growth. So I will quickly talk about how e-commerce itself has shaped in India in the last 3 to 4 years. So what we are saying is basically e-commerce is moving from shops to wheels, right? E-retail is growing 4 times faster than the traditional retail. And we are in India still at a very nascent stage of e-commerce penetration. We are hardly 6%, and this 6% also includes e-commerce like IRCTC and those things. If you really talk about delivery-based e-commerce, it is actually less than 5%. So there is enough headroom to grow, and that growth rate is visible, and this growth rate is going to sustain for next 4 to 5 years. So we expect this e-commerce to touch around 200 billion by 2025, and this would mean 1.2 million riders will be on the streets of the country by 2025. So our goal as a company is to really create a fleet of 100,000 in next 2 to 3 years, which is basically, 8 to 10% of this entire opportunity. Yeah. So in addition, what are the factors which are driving the demand for two-wheelers? Like we spoke about, delivery boys and why they choose rental over ownership. So this is a question that often comes to us, that why they would not buy their own bike and pay monthly rent. And the main challenge for them is that they are people who come from a humble background, and many of them don't have credit history. But that does not mean that they are. But they have an income source. There is a consistent income source. So paying rent is not a challenge, but getting a loan from a mainstream channel is a challenge for them. Yeah. The other key reason why they would prefer rent over buy is delivery job as a job is seen as a stepping stone to something different that they would want to do as they grow in their own life. So this would be hardly a 2 to 3 year commitment where they make some money, fund their studies, learn something new, and then eventually move on to something else. So that's another reason why there is no long-term commitment, and therefore, particularly for purpose of delivery, investing your own money in a two-wheeler. Also, we have seen interesting trends after COVID. There's a lot of drift away from public transport, say buses or even ride-sharing company like Ola and Uber have seen a significant reduction. So people are looking for option which does not really is heavy on assets and binds their own capital, but it gives them a sense of ownership. So and that's where the product as a service concept comes into picture. So this is a trend which we are observing across millennials, whether you look into segments such as furniture or any product. If there is a way to um, use the products on rent, on a shared ownership, why not? So that's the consumer behavior that we are observing, and we are tapping into that. Uh, so a quick stats around our company. So we are the leading bike rental company in Bangalore. We are always in top, I would say, either number one or number two if you do a simple Google search on bike rental in Bangalore. We are primarily focused on Bangalore, although our product and our capabilities are scalable across the country. But the opportunity in Bangalore itself is quite immense. We can easily scale from where we are now to 10x in Bangalore. So currently our focus is to really strengthen and cement our leadership here, and then go massively, at a certain point in time. We have been there for now 5 years, so, and have built a significant, sizable consumer franchise. So we have page visits on our website, which crosses almost 100,000 a month. Our app downloads are 200K on Android, plus we have App Store users as well. We work with all the leading companies directly as well as indirectly. When I mean say indirectly, I mean the end users are basically directly coming to our branches and taking the vehicle. So we operate, many of you would have heard of companies like Bounce and other who are actually letting their vehicles freely, so they don't have a proper place. So The idea is that you pick up anywhere the vehicle and you drop anywhere. We don't operate that way. Our model is very, very branch oriented. The idea is to give a disproportionate care and attention on the assets. So if you are renting the vehicle, our branch executive is going to do a detailed check on the condition of the vehicle, and it is expected that when you return the vehicle to the branch, you will do the same check again to see if there are any damages, etc. We also collect small deposits to discourage any undue behavior from the customer. We also have several algorithms in the background which filters out a certain set of customers. So we are, since demand is not a concern for us, we also focus very, very diligently on finding the right users. So until unless you have a proper address in the city, you have a proper working relationship with one of the known faces in the city, we tend to truncate those customers. So it's okay to really let go of the last 10% of the customers, and rather than getting into problems later on. So over 5 years, we have mastered a couple of things. One being identifying the right set of customers, taking care of the assets, of which I will talk later as well. Yeah, and with these principles, we have grown from a humble beginning to almost 1,200 plus vehicles. As we speak, we are adding vehicles every day, every week through our Volaris program. We have partnership with Hero Electric, and we are working very closely with them. We get price deeply discounted price from them on the electric two-wheelers. So I talked about our customer base. We deal with everyone. This is just a sample MOU with Swiggy, where Swiggy has agreed to broadcast our delivery, our bike rental application on their what they call delivery partner platform. So they have a platform where their delivery partners are onboarded and they are tracked and paid. So on that platform, they're marketing our service. So this is their commitment to electric two-wheelers, and they look forward to companies like us to expand EV in their ecosystem. So I'll quickly now talk about Volaris as a program and how you can enjoy a slice of this pie. So as I said, Volaris stands for vehicle on lease at rental income share. The concept is very, very simple. To any asset leasing entity, you create say LLP. So LLP invests, you will invest the money in the LLP. That LLP will generate, will buy vehicles, and that vehicles will be basically leased out to the end users. And the whole idea is that we guarantee a certain return. So if you invest 100 rupees, what we guarantee is in 24 months of projected duration, we generate 30% pre-tax profit, right? So if you invest 100 in 24 months, you get 130. Now this duration is a projection. How we achieve this projection is through what we call rental income share. So in practice, your vehicle is put on the road, it generates rental income. 80% of that rental income will be transferred to you every month, right? And that basis our current rentals that we charge in the market, it amounts to 130% of the investment. So basically, if you invest 100, you get 130. Now, because this is structurally a rental income product, even if there are variation in the during the months, what we ensure as guarantee to the investor is that even if we don't achieve 130 in 24 months, we will flex the tenure. So 24 months can go both ways. In fact, we can achieve this 130 target return before 24 months as well. If we don't achieve by 24 months, we will flex the tenure. So it can go to 25 months, go to 26 months. It won't go well beyond a certain margin because this is a segment where we see 95% vehicle utilization. 5% is basically, for periodic maintenance and the time lost between handshake of two customers. Otherwise, the revenue stream is pretty very less volatile, I would say, and therefore this 24 months can only flex in a very narrow band. Yeah, so it is a rental income share, but you enjoy a very high IRR in a period of 24 months, and you get a guarantee on the principal plus profits. So that's the product in the nutshell. This is how the mechanics of it would work. So investor money will be pooled in LLP, and this LLP is basically the asset holding entity where which sources the vehicle from the OEM and gets into a lease contract with Bike Mania. Bike Mania in turns will do rentals, will be renting out the assets to the customers. When any customer is paying the money, that time there is the money comes into a common pool account, and at the time of handing over the vehicle to a customer, that's when the exact vehicle is assigned to a customer, and that is when from the pool account 80% of the income directly flows into your account. So we have developed a custom application, iOS app or Android app for our customers, where they can see on a real-time basis, on a daily basis, how their vehicles are getting utilized and how the money is flowing into their account. So of course the money will be transferred once in a month, but in your account you can see how the income is generated on a daily basis. Yeah. Now on LLP, just a quick heads up on the taxes in India. If LLP is making profits, the tax rate on that is 30%. Any foreign person, NRI or foreigner, can be an investor in the LLP, and repatriation is not a challenge. Yeah. Now there will be so in India, if you are an Indian resident, post payment of 30% tax on LLP, there is no tax. For resident outside, we would urge to really look into your, get your own tax advisory on further taxes. For countries like UK, it is on DTA, so I presume there won't be additional taxes. But in summary, this is how the SPV will be created. The income will be generated and 30% tax will be paid in India. Yeah. This is a quick overview of the asset that will be purchased with the investment you make. This is a custom-made vehicle by Hero Electric. Hero Electric is the #1 EV seller in the country right now, and there are a lot of players which have come and gone, and we have done a deep research into the battery, the ability of the vehicle to withstand Indian conditions. So many factors. I think it's a long topic in itself, but what we can tell you is that this is a very well thought selection of vehicle from our side, and we are very proud to have this partnership with Hero Electric. The vehicle has a warranty for 24 months, including battery, everything. There are other parts on which we have got a bigger warranty, but 24 months, everything including battery will be completely under warranty. So if something happens, if there is any glitch, the OEM will be supporting us. Yeah. A quick comparison on why electric is going to be, massive, make a massive transition, or basically the delivery ecosystem will switch to electric very rapidly in the coming days. You can look at this comparison chart of ICE versus electric cost of ownership, which basically consists of 3 parts. You have to pay for the fuel, you have to pay for EMI if you are owning the vehicle, and maintenance. and you can see electric total cost of ownership is less than half of ICE vehicle. So this is opening up a huge opportunity for us. Any vehicle we are placing listing on our on our website or our app, it's getting sold out on the same day. So it's a massive sector which has just opened up. One of the major event that has happened, which is our government of India policy towards EV has been very, very aggressive. There has been some windfall subsidies on the battery, which has made EV cost very, very attractive. So even petrol vehicles are now more expensive than EV, which was not the case couple of years before. So at around 68,000, including registration, we are able to get vehicle. If you compare this price with Honda Activa, which is the the highest selling scooter, that costs today around 85,000 on Indian roads. So uh, the cost of ownership has come down for EV, as well as there is very less energy cost, and therefore the operating cost. So this opens up a huge opportunity for anyone to really, you know, uh, capture the market, and we are well placed. We have been in this business, and we have understood how customer behavior works in this kind of business. We have learned how to take care of the assets. So this is an opportunity for us to really, capture this market, and we look forward to Volaris as a program to meet our requirement of the assets. This is a quick overview on which battery selection we have made. So one of the reason why we have gone with Hero Electric is because they have the best battery technology, which is called LFP, lithium iron phosphate technology. Not many players have this technology, and we were very keen that we would go for LFP technology whenever we choose an asset, because it gives a longer life. It has got very good thermal properties. So just to give an example as to how we have gone about making our vehicle selection. Yeah. Like I said, maintenance is a key element for us. So we have, I will not get into details. I can take you questions on this, but I can tell you that we have built a very strong in-house expertise where we have followed, we have learned from experience and built that into algorithms. So there are very strict time-bound maintenance, which is triggered through applications, and it's all well designed, well structured, well scheduled, and this has given us huge advantage. So just to give you the proof of what we have done, the vehicles which were procured 5 years ago are fully operational now, and they are generating revenue for us even till now. So you can see these vehicles are the first lot, and they are generating handsome monthly income for us even in the month of October. So they are almost 5 years old now. We have investor all across the continent, as Anurag mentioned, from US, from UK, of course, a couple of investor base in India, and the white line that you see is the target commitment, and most of the months we are exceeding those commitments. There were certain hiccups during lockdown COVID 1, COVID wave 2, although it was harsh in India, but the delivery industry was actually doing more business than it was doing in the BAU, and therefore we did not see much impact of COVID in wave 2. And therefore, one of the things I want to tell to the community here is that this business model is pandemic proof. Yeah, I mean, food delivery is as essential as anything, as essential as it can get. So we don't foresee any disruption in our demand under extreme situations as well. So while there are uncertainties across many fronts, I would say that our business model is fairly robust. We have seen both waves, and we have survived, and we have emerged stronger. Yeah. So there are you might have questions around some scenarios, like what happens if there is a theft, if there is a breakdown. We have everything covered under insurance for extreme situations. And in case there are any challenges where vehicle cannot be recouped, we will get the full money. One other thing I want to tell is that because we are getting vehicle on subsidy, the IDV of the vehicle is almost equal to the entire investment that you make. So the money that can be recovered through insurance, there is no loss of capital. So because the value of the asset is more than the invoice value that we are getting from the seller. So that also helps us ensure that insurance as a final fallback, there is no loss of capital there itself. Yeah. So I think I've taken more than fair share of my time. I'll stop here. And if there are questions, we can take that. Thank you.
Thank you, Rudra. Sorry, just 1 second. Now that Rudra and Manik have presented their propositions, I would like to introduce you to Abhilasha. She is a fellow board member. Abhilasha has been part of Indian startup ecosystem since 2013. As she came out of the college, she created her or established her own company, the Venturator, which helps early stage companies and till date has helped more than 1,500 Indian startups get going on their growth story. Abhilasha moved to London in 2017, where she lives with her husband. And in 2020, she merged her company with the UK's largest and oldest angel investment platform, Angel's Den Funding. Today, she is leading the new formed company or the merged company as the youngest and its first female CEO. So nobody else is better equipped to question Manik and Rudra for this section of Q&A, and she has noted down all your questions. Give me 1 second till I set this up. Manik, your video is off. I still can't see you, so I can't put you in a spotlight.
Should be okay now.
Yeah. Sorry, 1 second. Okay, over to you, Abhilasha.
Thank you so much, Anuragji, for that very kind introduction. And a warm welcome to everyone. Jai Jinendra, I know it's a Saturday morning, but well done taking time out. Behave like a true Marwadi Gujarati community wanting to make money, never missing out an opportunity to do that. I can see a lot of questions for both the companies, but before that, Manik, well done. Very good presentation, very crisp, very precise. Rudra, brilliant again. I just want to say before I shoot out these questions, I just want to tell the audience that I have known both these companies since early 2015. I've known the founders. And I think what is absolutely brilliant about these guys is that they started a company in India at a time where funding and all of that was, not still so mainstream. And they have seen the entire Indian winters and still managed to sustain the company. And also grow it. The other thing which is exceptional about both the founders is that they have, there's this perfect founder market fit where they understand the industry in and out, and they have built products that not only de-risks the company, but also de-risks the retail investors. And that is why I felt very confident in getting these guys to our investors at Jito UK, because I think these are brilliant opportunities, but at the same time, it's very important that all of us, speak to the founders directly and do our own research before we move forward with any investment per se. All right, so with that, questions. I first have questions for both of you, which I think would be very relevant for our investors. And then I can ask you questions for your particular industry and company. I want to begin with asking you again, if you could just reiterate, what is the minimum ticket size to invest? What is the minimum lock-in period? And what is the return that the investor gets? Tax inclusive, everything. Give me the net amount. Yeah, Manik, you want to go first?
Yeah, so for the liquid product, which means you can withdraw anytime, the minimum ticket is 50,000. The maximum cap is regulated by the Reserve Bank, which is 50 lakhs. The returns are 9.5% per annum annualized. Tax is to be paid by the investor himself or herself under the normal tax slab. Under the fixed investment, which means a lock-in tenure product, the returns are 11% per annum. Minimum ticket size is 100,000, 1 lakh, and maximum is 50 lakhs again.
Got it. Perfect. Rudra?
So you can invest as small as 1 lakh as well. So people in India have done so. We have investors who have invested 1 lakh to 100 1 CR plus as well. Now, in terms of lock-in, because this is an asset investment, it is basically a guaranteed return product where you invest in the asset, and whatever rental income is generated, the 80% share will be paid every month till we meet our commitment of paying 130%.
Got it. Perfect. Thank you. The second question is, how safe is my capital? So under what circumstance can either of you tell me that the money is lost forever?
Should I go first?
Yeah.
So essentially at Lendbox, we deal with a very, very wide risk category of investments, which means I have products which you're very confident about, where we lend to the best, to the most creditworthy people, and which are backed by a lot of research and capital. And so these essentially low risk products where we offer anywhere between 9, 10, 11, 12% per annum. The risk here is very, very minimal due to the amount of underwriting, research, and the business models that we lend under. I can't call it a risk-free or a guaranteed product because of regulations, but we're extremely confident in terms of who we lend to under our low-risk products. Then there's also a high-risk category option available, which we haven't spoken about. There, the risk of the investment is slightly larger, lies with the investor, and we recommend people to read more about it before actually trying to take that decision. But in terms of the product we spoke about today, we're very, very confident in terms of who we are giving out to. If you'd like to give me some figures around default, in the last 6 months we've been working, there have been the collections are 98% on time and absolutely no default in per annum. What I spoke about today. In our other low risk products, the default is less than 1%. So we're very, very confident about what I spoke about today.
Sure. Thank you. Rudra?
Yeah, so in our case, you own the asset directly. So it is like, in simple words, you buy an asset and you give it to someone, lease it to someone who is actually renting it out. So what are the risks? The risk, if you say, okay, can a customer run away with the vehicle? I mean, they might try, but they won't, because all our vehicles are fitted with GPS. So we are tracking every asset real time, right? So even if there is any malintent, we will be able to get control of our asset. If it is an accident, we have our vehicle fully covered through insurance. Yeah. The demand risk, yes, there will be ups and downs, but what we are guaranteeing our investor is that you will get your principal plus profits. We project you to get this in 24 months. But if there are fluctuations in the business cycle, it may extend by a couple of months. So the only risk is that variability in the income, which we don't see now, because there is a massive supply demand gap, and all our utilizations are nearing 95% plus level.
Abhilasha, I'd like to add one more thing which is relevant and I missed, sorry.
Sure.
In terms of B2B2C products which are low risk, we also essentially sometimes have deposits or bank guarantees from partners we work with, which essentially serve as cover for default. So if I estimate at a larger portfolio level, my default will be say 1%, 2%, we'd like to keep 10% of the corpus as a bank guarantee. So just to give you some context, we try and forecast the default and have at least 2-3 times that as in the form of guarantees from partners.
Got it. Perfect. Thank you. My third question again to the both of you is just the investor journey. Can you handhold an investor from, let's say, if I want to invest 1 lakh in both these products, Manik, can you just tell me how do I go about it? Just the entire user journey.
So go to the URL perannum.lendbox.in. You'll find sign up as an investor option, enter your mobile, give me your PAN card. If your PAN is automatically verified, you can straight away add money and start earning interest from tomorrow. If essentially there is some lag in verification, someone from the team should get in touch immediately, help you complete your KYC, and then just add money and start getting interest.
Got it. Rudra?
Yeah, so in this case, because the investor here are overseas, we have various ways to invest. If you are in India, if you have an Indian PAN card like Manik is mentioning, you can do through proprietorship as well. But assuming that most of our investors here will be NRIs, so the ideal vehicle is LLP. We take care of everything. We'll have our LLP, ready. Any investor will be onboarded as an ordinary partner. So all you need to do is just provide us some basic documents. We onboard you as one of our ordinary partners, and you get your shares in LLP once you invest. So after that, taking care of assets, the management of the LLP is completely onto us. For you, it is as simple as any other financial investment.
Got it. Thank you. Thank you, guys. So I'll just come quickly to some of the questions that our audience asked. And Manik, let me begin with you. The first question for Lendbox was that, so who deducts the TDS, and are there any withdrawal fees?
Like I said, how it is with most investments, we don't deduct TDS. We aren't required by law to do it. So there's no TDS. Any tax on the income is to be paid by the investor himself or herself. And no, there are no withdrawal fees associated at all.
Okay, got it. Does the investment also require you to convert pound to INR? And then, so the FX is what the investor takes?
Yet that obligation obviously lies with the investor himself. We can only accept INR. So once you have INR in your NRO is only when your journey can begin.
Got it. What is the capital reserve of Lendbox to sustain possible losses?
So I did not get the exact meaning, but there are 2 ways I can answer this. One is what I've already told. For all B2B2C arrangements, we try and keep some bank guarantees as reserve, which is 2 or 3 times the expected default. So essentially, if you're talking about per annum, the reserve is about, like I said, 10-12% of the portfolio. Where we feel the risk is high, it might go up to 20-25%. But essentially, is a question that we answer when we enter into an arrangement. There's another. So besides that, the RBI also mandates a capital corpus of 2 crore rupees, which is for the NBFC itself, which is for Lendbox itself. That is not to cover for the losses, but it is just a regulatory requirement. And any company who carries this business has to have a capital reserve of 2 crores.
Got it. Manik, you mentioned your default rate is really low, but I'm sure you guys have a plan for recovery of funds. So could you just take me through that? How do you manage to do that?
So it's a 3-4 step process. What happens essentially when someone who's taken a debt, we like people who pay voluntarily. So the first step is the borrower himself or herself pays. UPI or whatever methods of payments are available. If that's not done on the due date, there is something called a mandate or a NASH, using which we hit the borrower's account, which means we try and auto debit the money from the borrower. If that fails, then there is a team which starts calling people, which starts reaching out to them. That does not happen. Like I mentioned, we try and only lend in cities where we have physical presence, which means that you might try and recover that debt by sending people to sending recovery people to the addresses we have, which is a last resort. And then even beyond that, there is the whole legal process of trying doing court cases, etc., all of that. But essentially in low risk products, step 1, step 2 is the best what happens, which means people pay before due date, or we debit their account on the due date.
Got it. Perfect. Just the last question then for you, Manik. I think you mentioned that you have about 50,000 investors. Do you also already have NRI investors?
Yes, we do. We have NRI investors who interact with their, so one thing which I've seen is that NRI investors like to talk to the relationship managers, seek questions before they invest. And once they're satisfied is only when they start. I can't give you a number of my NRI investors immediately, but and there's something also, a lot of NRI investors also sign up as an investor. And then there is a whole referral process which we have, where they try and source money from their own network and make a referral fee or a financial advisor fee on that. So that's a separate program which is also available for NRI investors.
Okay, perfect. So I think next steps for anyone who's interested in exploring per annum by Lendbox, I have left my details over here. If you could drop me an email, or if you could just ping me directly your email address, I will make a direct connect with Manik and the founder, and then you guys can explore this. Thanks again, Manik, for your time. And this was great having you present to our community. Right. Rudra, now questions for Bike Mania. So the first one, how do you de-risk the investor? Now, this is a depreciating asset in a very hostile work environment, which is the delivery business. And these are Indian roads that we're talking about. So can you just take us through how the asset is kept safe?
Yeah. So basically, just to clarify the point on depreciation, basically, as an investor, for you, it is as simple or as convenient as a financial product. You invest 100 and you get monthly a certain percentage, which is basically close to 5%. So you get almost 65 in first year and 65 in the second year. And after that, the custody of the asset gets transferred to Bike Mania. So that is the whole arrangement, and we are committed to pay the investor 130. So that is the number that we are committed to pay. If we have to extend that tenure, that extension will happen. So depreciation is our problem, because after 24 months, whatever, if the asset is not in a good condition, Bike Mania will not be able to generate any additional income in the later half of the asset. So first 2 years, our focus is to just 20% revenue share, just to manage our cost of operation and give entire benefit to the investor. And it is in our interest to really take good care of the assets, so that once the custody is transferred after meeting the committed guaranteed income, we get a good asset which can generate some income for the remaining life.
Right. And Rudra, in the same way, then what is the downtime? Let's say if an asset is stolen, what is the downtime by the time you get a new asset again up and running under the investor's account?
So far we have not had a situation where we have not been able to trace back the asset. The reason I mentioned before, that all our assets are tracked real time. So while if we are not suppose 1 month has elapsed and customer is supposed to return the asset to our location, we know the location of the vehicle. If we are not getting a response, if calls are not getting responded, we have a team which is dedicated to recover the assets. We know the location, we just pull back the assets. So theft is not a consideration. If there are accidents, the time will be lost to the extent of the time taken by our maintenance. So if there is a minor problem, we have an in-house expertise experts who are able to take care of minor replacement of parts. If something is really severe, then it will go to the showroom and the company service center, and that will take some time. So that's say maybe 1 week or so. Just what happens with any your own car when you are driving, etc. So to that extent, that's the only time loss. But it is not a loss, because like I said, if in a month your not getting the payment as per the projections, there is always next month it will either catch up, or worst case there will be slight tenure extension.
Got it. Perfect. Now I'm going to look at some questions that came into our chat. So I'm taking a question from Jayant. In simple terms, if I have invested an amount equal to buying one bike, how much rental would I typically get and for how long? Since the vehicle is leased by the seller for 24 months, does my investment end thereafter? So I think the question is, can he compound on the investment? And yeah, I think that's about it.
Yeah, so this product, we have tried to keep it simple, where you invest, say, for simplicity, let's assume that one vehicle cost 100,000 rupees. So you get around slightly higher than 5%. So in a year, you get 65% as per our, rental rental that we charge, and the 80% revenue share, right? The larger question, and once we pay 130, which is our guaranteed commitment, the custody is transferred. So the cycle ends. So this is one product that we have, fairly simple. We also have what we call compounded return products, which where the tenure will be slightly higher, and you did not, if you don't need monthly income, but you want the proceeds of your rental to get reinvested, we have a product for that. It's slightly we need to explain in detail, slightly nuanced. So individual investor who don't need monthly income, we have a product for that. I can take such interests on a case-to-case basis.
Perfect. So one of the other questions is that after 2 years, what is the maintenance cost outside warranty? I think you answered that, because then you take the custody, right? Do you want to just answer that again?
Absolutely, yeah. So see, the reason is, till 2 years as an investor, you don't have to worry at all, because Hero is giving a warranty for everything, including the battery. Yeah. After 2 years, we pay the guaranteed principal and profit, and the asset gets transferred. So we need to ensure we take good care in the first 2 years and thereafter as well, if Bike Mania has to really make some profits on the balance asset.
Got it. Perfect. Second last question, actually, Rudra, can the off-road asset be replaced by an older asset that you have as a bank vehicle so that income is maintained? I think this is in relation to the conversation that we were having about, an accident and a downtime.
I'm sorry, I did not understand the question completely.
Nimish, do you want to take this yourself?
Yeah, thank you, Abhilasha. So, Rudra, in the examples where income drops because the asset is off the road, lack of traceability or accident or whatever, but you have a bank of 2-year-old or more assets which are running around, hopefully, can they be used to replace an asset after a certain period of time so that income restarts?
So the way it works, Nimish, is that right now most of our assets are, so we have investors. This is a 2-year product that we have launched because it's electric, and we don't want investor to, we want to give investor early exit. But some of our vehicles are 3-year. Our investors have in contract with us for 3 years. So most of our vehicles are, on such contracts. We are yet to have a pool of assets where we have where we have completed exit, where investors have exited, and therefore right now see, in the entire scheme of things, this is the only variability, which is basically lost time due to accident or lack of response from. I would not call it theft. I would call it basically idling from the customer side. Even there, what we do is that we take certain deposits. So suppose your reservation expires on 31st of the month, you did not return for 1 or 2 days. Our people will go there, bring the vehicle, and adjust those 2 days against the deposit. So even a delay in customer response is not a loss of time for us. The only thing which is a variability here is lost time said due to accidents. So currently, I would say the way we are taking care of that is through 10-year extension. So we are projecting an IRR of 30%, and there will be slight variability around that. That's the only variability which investor has to live with.
Thank you.
Perfect. So the last question then, Rudra, most of your investors on the Volaris program have been NRIs. So what was the initial pushback that you faced from international investors, and how did you win overseas confidence?
So to be honest, I was surprised at the amount of at the positivity with which our proposal has been received by overseas community. And one of the feedback that I keep getting is that that this is something which if you put your money in a bank, you get very low return. So here we are giving them the comfort of ownership of the asset. So the only questions is more around how do I invest? Can I do it through my NRO account? We usually encourage people to invest through either directly if they have some presence in India, or through family, because in India, if you directly present, if you invest as an Indian, then there are probably there are ways to optimize further taxes. So that's the larger discussion to how to make it either tax efficient or keep the transaction very simple. So LLP as a vehicle provides a lot of simplicity. You can repatriate without concern. So I think that has been the bulk of the discussion. Otherwise, I think product per se, people have invested. They have introduced me to, say, IIT Network in Canada. So I have done similar workshop with them. So people who have invested, they have doubled down, and they have introduced to wider network, I would say.
Perfect. Thank you so much. I think that's it from me. Just last steps in terms of if anybody wants to further explore the opportunity with Bikemania, I have again put down my details. And I look forward to connecting interested investors to both the companies. That's about it.
Abhilasha, if I can just come in quickly, because of the nature of the investment in INR, perhaps you can just say a few words about the ease with which people who may not have PAN cards and NRO accounts can set that up.
Right. Do you guys have any visibility on how somebody can do this if they don't have a PAN card, or if, because a lot of our investors are actually from, Africa. So if they don't exactly have a PAN card or a family in India through which they can do these investments, is there a workaround for them that you guys have come across?
So Abhilasha, for investment in Bikemania, you need not be, Indian resident. Any foreigner can be a partner in an LLP. So LLP constructs allows FDI. Yes, we will need the documents which are which the individual holds for their own country of residence, etc. But it is not a condition for us. I mean, any foreigner technically can be a partner in our LLPs.
Okay, and Manik?
No, PAN card is actually mandatory. I will. I'm not the best person to answer this, but let me go back and find out that how exactly can we help you get around the PAN card situation. I think most people establish HUFs. I think that's a quick process, and I know for sure. But let me send you a write-up once I know more.
Perfect, and I can circulate that with the community.
Yes.
Okay. All right, perfect. Thank you, guys. Anuragji, over to you.
Thank you, Abhilasha. Thank you, Rudra. Thank you, Manik. It was, I'm sure everybody will agree, it was a very informative Q&A session. I guess I got more clarity after seeing the presentations in this Q&A. So thank you very much. So Jito, next upcoming exciting events and activities. As already Nimesh Bhai mentioned in his welcome address, there are few things which are in the works. We are going to be establishing a stronger international links and streamlining the access to overseas chapters, not only for assistance, so that we can trade with them, we can benefit from their cooperation and experience. There is an event, Finance for Couples, which is being planned and worked. I'm hoping very soon we will be able to announce that. There is a event around a matrimonial by Mumbai chapter, which is going to be taking place on 12th of December. So look out for that. We will continue with our finance market updates and other master classes for specific industries. If this is successful and if this kind of investment opportunities are attractive to our audience here and broader community, we will try to bring more of these. Physical day conference style event is being planned, hopefully sometime in March. Fingers crossed that we won't have another lockdown kind of issue. So please look out for that as well. Our new sponsors who will be joining us soon will also be running high net worth individual events where they will be guiding us through investments. And for example, today's investment opportunities require you to have an NRI account. They should be able to help you in due course. Just like today, we have presented these startup products. We hope soon we will be able to bring more UK startups and UK investors, or Indian startups for UK investors. So look out for that. The last one, which is also going on, funding for Sharam Arogya program in India. So please, this is a key program to look after the health of our sadhus and sadhvis. So please look out for announcements around that. We do look for ideas. We want you as community members to come up with ideas, and we will do our best to bring to you what you are asking for. So please send us email on info@jitouk.org, and we will see what we can do for you. Second last thing, please become a Jito member. It is very important that we grow our Jito UK community. And yesterday when I spoke to Nimesh Bhai, we are looking for more of our community to come and present as well their products so that you can market yourselves. You have to be member to be able to market yourselves, and we will try to work with other chapters so that, for example, as an example, export and import, you might benefit from it. So please become a Jito UK member, connect with like-minded people locally and across the globe. It helps us empower our community, business, idea, and trade opportunities. So please go to jitouk.org, become a member, or send an email to membership@jitouk.org. Contact Nitin, who is our membership coordinator, on 07980155794. This basically brings me to the end of this session. And for a change, we are ahead of schedule by 2 minutes. Thank you very much, Nimesh Bhai, Abhilasha, for bringing these two companies to our investors, potential investors. Thank you, presenters Manik and Rudra. Thank you, Girish, behind the scenes. Excuse me. Thank you, Girish, behind the scenes, Sulabh and Nimesh K behind the scenes. Have a fantastic rest of the day and weekend, and see you in the next event. Thank you.